We're looking at S&P 500 mini futures, and the very first step as a price action trader that I need to do is to identify the overall market structure, because if I know what is the market structure right now, I can predict where the market is going to go. And since I'm going to be able to predict where the market is going to go, I know what kind of setups I'm supposed to be looking for to capitalize on the structure. So I can see that we spike down and we have a series of low highs and low lows. The EMA to 1 bar exponential moving average is also pointing down, keeps rejecting prices. So there's definitely a bearish bias, and I cannot have these candles on a chart without a pattern. So my goal is to look for a good channel that would explain this price action. So I'm going to start at the beginning of the move. If I'm going to draw a channel like this, I already have a small break, new low, another break, a new extreme. So once this keeps happening, this is a sign that there is a spike and a channel pattern, okay? Once you keep getting a lot of small breaks and new extremes, you have to resort to spike and a channel pattern. So initially I was looking for something like this, but this is a little bit too broad. So what I like doing is I like cutting the corner just a little bit, because I basically still keep the structure intact. You can see I'm getting a lot of confirmations off of these lows, and overall it fits really well. Spike down, this is a spike and a channel pattern. Right now the stock market is about to open. We have an uptrend, break, and new high. As you can see, I'm not only looking for big channels with the direction of the main trend, but I also have to follow the short-term correction channels, because there is a short-term correction channel inside of the big channel. So right now we have a break, push to a new high. So this is telling me that this bullish correction played out. And if I'm going to get a push below EMA, that is a good sign that the sellers right now are about to test the new extreme. So this is how I am putting all the pieces of the puzzle together, and I arrived to a conclusion that the bias is bearish, and I expect new low to be tested following the trend line rule. So market is breaking below EMA, and we actually have a lower high confirmation setup. Okay, uptrend, break new high, depletion, break below EMA, resumption of the selling momentum, and you have first entry long is going to fail. So this is a lower high confirmation setup. We expect new extreme. Now this lower high is not for the EMA, and for this reason I didn't take it, especially since it happened this early in the day. You know, it is close enough, but it's always better to see a setup closer to the EMA. The signal bar is really nice. You expect new low, but simply I don't want to mark it red because it's not for the EMA. Therefore, it is more aggressive setup. But me personally, I skipped it, especially since it is this early. There was no for second entry long, and downtrend plan with the break in new extreme. So right now what I'm going to do, I'm going to pause looking to go short, because the trend line rule says after breaking new extreme, you have to pause because the trend played out, and you have to wait what is the next market cycle. So right now, I'm just going to lie back, and I'm just going to observe price action. Okay, additional push down, so structure is a little bit more bearish. Let's see what's going to happen. And market keeps trending lower. Okay, so when I'm watching this, it doesn't look like there is correction, no reversal after break and the new extreme. You can see how exponential moving average kept holding every single time. In fact, I have small resistance, and there was massive push phase working lower. So you can definitely tell that the bias and the trend is still bearish, and I'm reading the candlesticks alone, and I can understand exactly what is happening just based on following candlesticks and this simple supportive indicated 1 bar EMA. So because the trend down still looks structured and still looks in play, I can look for some different channel, and there's a decent spike in a channel, something like this. We always want to have a lot of confirmations. So I'm going to delete this. It served its purpose, and now I'm going to draw a little bit wider, and you can see how many confirmations I'm getting. It really looks structured, no empty room, spike down, channel pattern. So far this is pretty decent spike and channel pattern, and right now the trend is bearish. So I'm only thinking about short opportunities. I cannot counter and trade, and I cannot sell super far from the key entry point, either EMA or this trend line. Okay, market needs to correct to the key entry point, and then I'm looking for reasons to go short. Okay, you can see the significant moves happen always when the correction is ending. So you want to catch the end of the correction and beginning of the new push phase. Okay, market is going sideways, but we're so far from the EMA, so I'm just waiting here. You know, we're not full at the EMA, so I'm just waiting here. Once again, we're going sideways here. I have to redraw another congestion. So part of trading is being patient. These are the areas where I'm being patient. Okay, no good setup, no nothing. We're going too sideways. I'm going to redraw a brand new uptrend now. We're correcting, okay. I'm actually going to draw a little bit wider because the break is so insignificant. It still looks like a one push working higher. So we have uptrend working higher. And right now, we're breaking below EMA and we're breaking below EMA strongly. And notice how far we retraced this initial uptrend. There is not going to be new high because we retrace almost the entire uptrend. This means that the bulls threw in the towel, and this is a really good sign that the trend is strong. You can already tell that the downtrend is very strong. You can see how the pullbacks are minimal, a lot of small bars working lower, EMA keeps rejecting every single time. This is a strong downtrend. So right now, you know, the fact that we retrace so much, this is telling me, okay, the sellers are really in the market. And I'm even considering second entry short. That would be a lower high counting from the high. So we have a new low here, no break below, no break below. First entry short pullback, second entry short. If there's going to be a break below this bar, or you can view it basically as a new high here, a lower high counting from this high. It doesn't matter. Now this signal bar is okay. I had a little bit different bar than most traders. I actually took this setup. I liked it. It's not really at the EMA with the body, but when the trend is this strong and the retracement was so deep, you know, it is a decent setup. I took it for small scalp because there's not that much room to get out. You may want to consider limit order, but this is a decent setup, lower high. Now, I have a good bar. If you have different bar with neutral body or slight bullish body, I definitely would have skipped. So maybe you don't have this bar, so you have to skip. But it's good enough because the trend down is so strong. Market keeps working lower, and now you're really confident that you're trading a strong downtrend. You have to reset the count at each new low. I have so many first entries, so I can't take anything. New low, first entry short, and you have second entry short. We have a new low here, first entry short, pullback, second entry short. At the EMA, nice rejection. Look at the tail, the bar looked very bullish. Towards the close, seller stepped in, reverse down. This is a reversal bar, second entry short at the EMA. High probability setup. Market keeps working lower, new low, first entry short. I'm not going to treat this as a lower high breakout pullback because, you know, you already broke the low. I prefer to view it as first entry short only. So I'm just going to be patient here. You know, the trend down is really strong. You can see only first entries. So far from the EMA. Okay. And once again, you can see all the significant moves happen at the top at the key entry point. So I'm not really looking to sell at the bottom like this. I'm going to redraw the short-term uptrend. Now, the thinking process is still the same. The trading strategy is still the same. I want to see second entry short at the key entry point because the trend down is still in play. Can I get a second entry short? I have a second entry short, but the signal bar is terrible. Of course, I cannot sell below this bullish doji. We just had lesson about signal bar. So this is a terrible signal bar to sell below. So no entry, no second entry short that we can take. And market keeps working higher. So at this point, it looks like the channel is a little bit wider because the structure looks like a one push working higher. Okay. I have a new high first entry long, but we're above EMA. There is no bullish bar in between the first entry long form above EMA. So I was thinking actually about failed second entry long, maybe. But it didn't happen. It triggered below this bar. Of course, I cannot sell below this bar. So there's no setup here. And now we're just going sideways. You have congestion. And once again, I think you probably have different bars here, but you have to respect the short-term trend. And you can see you have congestion, no good setup, counter reset first entry, EMA exactly on these bars. So no setup on this chart just yet. It looks like uptrend wants to test the new high. I was actually thinking, okay, can I get a lower high breakout pullback? No, we're back above EMA. So right now we have a break, push to new high. So uptrend played out with the break and push to new high. Okay. So right now, I'm going to zoom out. You can see this looks similar to what happened right here. Okay. So you need to teach your brain to look for these patterns and think in sync with price action rules. It is not super hard. You just need to get some experience to get used to this. And this is easy structure, but you already know what to expect. Okay, the trend down is strong, so you understand the bias. Okay, you understand the bias. You have uptrend breaking new high, uptrend breaking new high, so you know that the correction played out, but you don't know how many pushes higher there's going to be. This is why, if you're not at the key entry point, we want to see push below EMA, and we want to see what happened here. A lower high below EMA to test the new low, or we want to see failed second entry long. Okay, so you see now that once you understand this language of price action, what the candles are telling you, you're in much better position than most traders out there that have tons of indicators on a chart. They're watching multiple different, tools, and they get too confused. They don't really understand what is happening in front of them. They are using crutches. They can never really get off the ground and reach their full potential. But if you focus just on these candlesticks, you can really understand how market moves. You can understand its tendencies, and it is much easier to predict if you just get rid of all the unnecessary indicators and just focus on pure price action. So right now, I want to see the push-pull EMA on a lower high. No lower high on my chart. I noticed some traders had lower high here. So if you had a lower high here that I saw a couple of traders had, you can consider. If I remember correctly, it was a little bit steep. There was no bullish bar pullback in between, but it formed right after you break below EMA. This is good. You like lower high right after you break below EMA, and the two legs are so clear. Downtrend is so strong, so you can consider. But on my chart, I don't have it. I have it all the way down here, so far from the EMA, I can't take it. And downtrend played out with the break, push to a new extreme. So downtrend played out, so I'm going to pause, looking to go short, because the trendline rule says that after breaking new extreme, we can get correction or reversal. Okay. I have a second entry short. Of course, I cannot take horrible bar, and we just had a new extreme. Now it gets a little bit tempting because now you have some lower high, but I still think it's a little bit too early. We just had a break and a new extreme. Now, after new extreme, we skip the second entry short, but a lower high confirmation setup or these more advanced setups, such as double traps, etc., they can be considered even after new extreme because you already have more confirmation. You can see how consistently EMA keeps rejecting here, here, and here. So you probably understand that, okay, because the trend down was so strong today, we were trending the entire day. There are definitely reasons for market to continue working lower, but, to my liking personally, we just had a break in new low. It's just not worth it. Why bother selling after new extreme when you're taking unnecessary risk, when you can bet on setups when the trend is still in play? It's always easier, and you gain more confidence selling when the trend is in play. Now it feels more like a gamble. The risk increases. If you took it this low high, no problem. I'm not that big of a fan because it's a little bit too risky, but trading is about taking a chance, okay? Some traders have different risk tolerance, and you can see EMA rejections, nice tier 1 signal bar. Gut feeling was telling you, and it was telling to me it's probably going to work, but I simply followed the rules. It did. Ended up working, breaking new extreme. At this point, I was thinking, hold on, is there some wider channel? But if I'm going to look for some wider channel, problem is, nothing fits that well. If I'm going to draw a wider channel like this, the structure is okay. Problem is, no confirmations here. You can't even get bounce here. So I don't like having so much empty room, no bounces. That doesn't feel that great to me. So I'm just going to follow breaking extreme. When the trend down is strong, you can have some residual momentum. Redraw the uptrend working higher. Breaking new high, uptrend played out. New high for a central long. I was looking for failed second entry long below EMA. That never formed. You have it so far from the EMA here, can't take it. And now you're just whipsawing up and down. Not easy structure to navigate. You have to follow the short-term channels. Okay. I'm cutting the corner here a little bit. What if I'm going to draw it a little bit wider? It fits actually pretty good. The structure still looks like a one bullish leg working higher. Okay. You have some new high, first entry long, second entry long. Very tempting, but the body is not with the EMA, and this is the counter trend move. We trade down the entire day. Decent enough. And now it's getting way too late. The market is about to close. So this is the overall structure for today. It was very predictable downtrend. Break 2 legs to new extreme. So we can see that there was no wider downtrend. It really didn't have any confirmations. So it's better to just focus on break new extreme, because when the initial trend is so confirmed and price action fits so well inside of this, I prefer to follow this one, and then market ended up reversing toward the close. So yeah, decent price action. I'm gonna wrap it up. I hope you had a good trading day. I'm gonna talk to you next time. Good luck with your trading.